Bitcoin today is at $87,500. That's a $10,000 difference to what it was a whole year ago at 97,000 on this day in 2024. That's an incredible level of volatility. Obviously, at the beginning of October, we were up to $123,000, $124,000 per coin. And those are indicators of the volatility of what you and I are holding on to for dear life. Not in the sense that it's a desperate process. I think it has felt desperate for those who joined the Bitcoin process. I nearly called it the Bitcoin party, but I don't think they will be feeling like a party. The people who joined recently, because a lot of people will jump on a bandwagon when they see something is accelerating or shooting, and I see this all the time with stocks. But when Bitcoin was approaching 110, 115, 120, 123, there was a momentum in the market that was driving people's behavior to think, oh, I don't want to miss out. FOMO, or fear of missing out, is something that does drive retail investors, people like you and I, who think, oh, if it's going to keep going, it's going up tomorrow, it's going up the next week, it's going up in 2 weeks' time. I have to jump on now and get myself a slice of this stock or this share. If we look at volatility as an indicator of the reasons to buy Bitcoin as opposed to the S&P 500 or in England, the FTSE 250 or the FTSE 100 for the prime companies on those registers, volatility is something we need to be mindful of. Bitcoin's volatility is enormous. It can go up and down all the time. And as we've seen in the last 6 weeks, that volatility has scared a lot of people. A lot of people have decided, no, that's enough for me. I've got to get out. I'm going to get rid of X percentage of my portfolio or all of my portfolio. And those who finance their purchase of Bitcoin since the beginning of October, in the last almost 2 months, they will have had a terrifying ride, seeing it fall from 123 to 100 to 95 to 92, down to 83 or 84 last week on the Friday. And now we're back up a little bit to 87,000. But what does that matter, and why is that significant? If I buy stocks in the S&P 500 or the FTSE 100 here, those companies can generate more shares, they can print more shares. Yes, they can have share buybacks, which gives retail investors confidence that there are less shares in the market, so their shares are slightly more at a premium price, or they are shares that can be held for longer. And that gives temporary confidence. But the whole thing about Bitcoin is there are 21 million coins, and that's it. That's the limit. We're not going above it. We're not going below it. There are 21 million coins that will be in existence when all of them have been mined. That means that Bitcoin is the most finite asset on the world stage. Last week, there was a bizarre announcement that China has discovered yet more gold reserves. I say bizarre in the sense that it's good news, but it's only good news for those who think they want to hold a physical way of maintaining their purchasing power, of maintaining their wealth. And of course, you can't go into most places in the world and buy anything with gold. You can with Bitcoin, and increasingly so as more and more merchants are adopting the coin and letting it be something that you can do business with, that you can trade with, that you can exchange for Bitcoin. Volatility also has another significant factor in the sense that volatility on the stock market is maintained where possible to quite a small level of volatility. So the rises and the dips and the rises and the dips will be fairly constant. And that gives reassurance to people who believe that they need stocks and shares in their portfolio, in their retirement funds, in their longer term planning, so that they have some income from dividends primarily to be able to look for in the future when their working years are over. Bitcoin is completely different from that. Bitcoin's volatility is driven by levels of liquidity in the market. At the moment, there has been huge buying and selling activity, but lots of the recent people, like I've referred to, have come in and they have sold their coins because they're terrified of the price fall. It's fallen from 123,000 to 87,000. That's a staggering amount. But what it means is, for those of us who are hodling, those of us who are stacking Satoshis, we are buying more in all of those dips than we were before. Bitcoin, when I started, was at $65,000 a coin. Now it's at 87.5. Okay, that's a significant increase on any standard, on any indicator. That's a huge increase from 65 to 87. It's gone up by almost a third of the original 65,000 price to hit 87. But when it was at 123 at the beginning of last month, I was amazed because I thought, hey, this is true indicator of the power of a rare resource. Gold is rare until somebody discovers another mine, and then it becomes slightly less rare and it's expensive to mine, and hence its price per ounce. Bitcoin is a finite item. There are only going to be those 21 million. And so that means that when people purchase, and the retail investors in particular are getting out of the market, often with losses for those who've been in these last 2 months, they are getting out, and the rest of us, you and I, are through dollar cost averaging every week or every month or every paycheck, whatever it is, we are buying more of that particular finite asset, and we are holding them. I'm not selling. Are you selling? Sometimes you could be tempted to sell, but it only takes 30 seconds of rationality and common thinking to say, what the hell was I imagining? No, you keep buying, you keep stacking, and you keep accumulating, because in those dips, your purchasing power is so much greater. Let's simplify the numbers to 120 and 80, and you'll see the proportions. But if you were buying Satoshis at $120,000 per whole coin, and now you're buying them in the 80s, how many more Satoshis are you getting for your $100? A phenomenal amount. And with that, you can, excuse me, and with that difference in pricing, you are really filling your boots, literally, with Satoshis, so that your portfolio, your holdings on a hard wallet off the platforms are secure, but they are growing phenomenally because of the volatility. Volatility for you and I as Bitcoiners, as buyers of Satoshis and stackers of Satoshis, it means something very different to those who are holders of stocks and shares in a retirement portfolio, thinking I will just keep accumulating and reinvesting the dividend activity to see my portfolio grow. But there are two failures with that. As I've said, stock companies can increase more, they can issue more stocks, they can issue more shares, and that means that there is a weakness in the market. But it's wanted by governments, it's wanted by pension companies, insurance groups, because they rely on people leaving their money in those pension funds or in those investment pre-retirement funds. And that's where they get their profit from. That's their whole modus operandi, the means by which they seek to exist. But you and I, with BTC, with Satoshis, our goal is to say, right, every week when I dollar cost average, I want to close my week with a slightly greater amount of those 21 million as a proportion in my own portfolio. And we don't have to hold it on exchanges, which are the equivalent of the brokerage platforms that you see in the global stocks and shares market. No, you secure your Satoshis, you hold them in a safe place, and you know that every time there is a wobble and the pricing of Bitcoin drops, you are dollar cost averaging, and because of the volatility being greater, you are securing more of a finite asset in a way that cannot be done in the stocks and shares indices around the world, because they are controlling the stability wherever possible through government intervention and the companies themselves issuing more stock every time they decide to generate more revenue. So keep stacking, look at the volatility, and I would say actually embrace the volatility. Embrace the volatility, because that's one of the core aspects of Bitcoin that outsiders don't really understand. They look at the volatility and they panic because they were raised and they've grown up with whatever they are, whatever age you are, whether you're in your 20s or 30s or like me, you're in your 60s. We were raised to look at the stock market as the way to prepare for retirement. Bitcoin is different. Bitcoin exists in its own little universe, but it does that because of its scarcity value. Keep stacking and you'll be absolutely fine. Don't fall for the fear-mongering, because the fear-mongering is driven by and provided by the traditional media, which has grown up, like all of us have, on the idea that the stock market is the only place to hold your wealth. Keep going, keep stacking, and remember, dollar cost average and take advantage of these volatilities.